Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi everyone. Today is Thursday, June the 12th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We begin by looking at the ES, the E-mini S&P Futures. Hey, the PPI is in less than an hour. Some interesting things to note overnight is that review of the charts show that although the VIX is low, the VVIX, which is the volatility of the VIX, has begun to spike. This means that big money is hedging. So, how do they hedge? They hedge with options, but they also hedge by shorting the indices. So, what we have to look for is potential continuation below the expected move today. That's something super interesting. Also, today at 11 Eastern, I will be on, I think it's 11. I will be on with the Mentor Q guys and gals, and so hope you get to see me there. All right, here we go. The opening range is about 15 points wide for the ES. The expected move to the upside, 6,062. The expected move to the downside is 5,984. The largest volume stick candle of yesterday occurred at the 2 p.m. candle. It is a bearish candle, and we are currently underneath it after trying to bounce and not being able to recover even half of it. That seems a bit bearish to me. So, that being said, bounces look like sell zones. Here's the issue. We should have another wiki day, just like we had yesterday. The zigzag pattern shows an updraft on the hourly formation, and the base of that updraft is our low on the expected move. I suspect we break that edge with a wick and then move back into the edge. That gives us the same sort of formation as yesterday's, only the inverse of it. We break down and then we bounce. That being said, shorts could easily step on the necks of buyers who are trying to get ahead. Okay, so that's what we're staring down. Momentum is negative. Momentum is definitely negative. Trend, however, is positive. And when trend and momentum are in opposite directions, we have candlestick formations that retrace. And here you can clearly see it, right? Up and then down, and then up and then down. So don't get caught in the middle. Very, very important. All right. We are underneath the moving average. That moving average is flat to up, meaning that traders are looking for support. So let's pay attention to that. Right? If we get back inside of 6,005, it could give us a nice long into 6,012, 6,020, but we're probably going to stall there. If the PPI gives us something else, then that might be very interesting. My thought is big noisy patch. I'm going to watch for the very deep spikes down to buy, the very big spikes up to sell. If the PPI comes in and it really starts screaming to the upside, I am going to put a short on the edge there. If it collapses to the floor, I'm going to put a long on the edge there. Where could the market fade to? Listen, we got about 60 points to the expected move on the week. It could come all the way to 59.28, but it is still just Wednesday. So there we go. Let's take a look at the NQ. The NQ, the Nasdaq Futures, what are we looking at? Look at Knucklehead Fred here. Did not move the opening trades over. That. I did the measurements, but didn't move the formation. All right, what are we looking at? Well, opening range in the candlestick formation looks like about 75 to 80 points, nothing outrageous, right? The largest volume stick candle of yesterday was also the 2 p.m. formation, and we danced Inside of it, we did recover 50%, but we could not hold it. Now we are underneath the low of the opening range after testing lower. Top of the expected move, 22,600, 22,066. Lower edge of the expected move, 21,696. Easily we could expand out of that range if the PPI gives us a number that the traders don't like. What will that number be? I have no clue. I don't have any idea how the traders are going to respond. I do know that they are pushing on the short side of the futures, the equity futures, and so that might mean that if it comes in and it gives it an updraft, it could really swing high, as they'll want to get out of the trade being on the wrong side of it. What's the trade again? Deep dips are buy zones, big spikes are sell zones. Notice the zigzag pattern is almost flat. Momentum higher than the ES, but still in negative territory. Still in negative territory. Moving average up to flat, and so traders are looking for frontline support. I suspect it's at the bottom of these ranges. I would look for long action on the deep dips and short action on the big spikes. That's what I'm staring down today. You can see the levels, of course. These levels are from Mentor Q. They put a lot more of them in there so that you can stair step. And if you trade stocks and stock options, this is an amazing tool. Highly recommended. All right. Yeah, let's go. Let's go. Let's look at the YM. All right. Still got a very wide range here before the June expiry in less than 2 weeks. So what does that tell us? Well, let's have a look at this. The opening range, about 60 points, 70 points maybe. We are underneath the low of the opening range. The highest volume candlestick of yesterday, also at 2 o'clock. But it sits inside of a lot of other candlesticks. Take a look. 1, 2, 3, 4 boxes of congestion. And we are at the base of that congestion edge. This is my thought about bounce action. I suspect that the YM is close to a bounce event. However, I cannot step in front of it because the PPI is coming. So, if there's a deep dip, you better believe I'm going to buy the bounce. Could you put a stop buy in this area above 42,650, 660? Yeah, absolutely you could. But if it's a wick action and it goes up and then down, you're toast. So just wait, let it settle, watch for the deep dips to pick up the buy. I would not be surprised if we had ourselves some kind of shock move in one way or another, but this one is definitely looking like a buy zone. Maybe you want to try a micro instead of a mini. If you're convinced about that, I am going to wait for after that number because my zigzag is up. My trend is up to flat. I'm under the moving average and momentum is negative. So there's a lot saying that this price action could fade dramatically and then turn around. I think that's what they're waiting for, essentially. The big sweep down, because we've been sitting here for 4 hours. Okay? So upside 43,080 to maybe 43,205. Downside 42,456 all the way down to 42,260. Messy. Let's look at micro Bitcoin. This one's been doing a bit of fading. Staring the chart down, the opening range was about 600 points wide. All right. And we are below the low of the opening range, and we just have not been able to buy that area. Also very interesting, the expected move from top to bottom is just like, I don't know, 1,200 points wide. These guys are way underestimating the volatility sitting inside of Bitcoin, unless they decide they're actually going long on either edge. People selling the options in Bitcoin have been absolutely smoked. The ones buying them have been pretty good overall, and the ones who are trading the weekly implied volatility moves, those guys are making money. Notice 3 times we rejected it. Opening trade on Monday, Tuesday, twice. And now today, back in the range. I expect price action to come into the gap here at 106, 106,000, and potentially even 104,645. Expected move on the upside, 109,565. Expected move on the downside, 108,300, and we are sitting at 107,300. So there's a pretty sharp acceleration to the downside. The zigzag pattern shows downward trend. The moving average shows upward trend to flat. Momentum is very negative. It tells us the traders are looking for support. So until they find them, every bounce is going to be a sell zone. That's what we're looking for in micro Bitcoin. And you see the levels there. All right, let's look at copper. All right. Copper's been moving a little bit sideways. Momentum is right in the middle of the zone, right? The opening range was, wow, about 150 ticks. So not huge, but certainly tradable. And what we are seeing is we are moving above the opening range and failing, and then below the opening range and succeeding. What does this tell you? A potential megaphone pattern. Okay? It tells you traders are trying to resolve at the same time collecting inventory. The call wall, 4.75. The well, we don't even want to talk about the one way up there that's almost 5, right? What is the trend? The zigzag pattern shows down. The moving average shows sideways, but a little bit down. Also, this is a very sideways formation. Take a look at this candlestick way over here from June the 3rd, right at the bottom of the box, and not really resolving. Okay, largest candlestick of yesterday is still inside of that box. So traders are trying to resolve. They're either going to resolve lower or they're going to resolve higher. I have no idea which way, but my thought would be watch for the spikes to go short because trend is down and momentum is sideways. That would be my thought. I would be looking at the bounces to sell. Ideally, I would like to see 4.85. That would be a great shorting event. All right. Also today is the EIA report. And so that takes us to oil. We know Iran, they're saying they want to chat, but, they have no intention of. They're going to do what they believe as their own sovereign nation is in their best interest, right? They're going to do what they're going to do. And so we should understand that going in, right? So here we go. Opening range. That news overnight really spiked this chart. $68.50 is the low of the opening range, all the way to $69.29. So what are we looking at? 70, 80 cents of motion. Normally, the daily implied vol move for oil is about 70 cents or so. Today it was over $1, and we've still blown past it. Low edge of the expected move, $67.94. High edge of the expected move, $70.04. The weekly implied vol move was $66.97. We are testing that, so I anticipate a bounce action event that takes us above the zone, or a bounce action event that fails, right? The highest volume candlestick for yesterday is this one, occurring also at 2 o'clock. So something hit the wires and all the algos went, right? It should bounce and hold or bounce and fail. Nevertheless, I'm expecting a bounce. Now, if the PPI comes out and it forces price action down, the next buying zone I like at around 65.69, which is the high volume candlestick from 2 days ago. Okay? Trend, zigzag pattern says up, moving average says up, momentum is down. So what does that give us? Bounce actions and reversal actions as the price is trying to find support. That's what's going on. All right, let's go to gold. Also interesting. Golly, what is wrong with my mind? Well, besides the fact that I got up at 3:30 again. All right, let's take a look at this. We've got 22, that's 30, 34. This one's up at 34. Oh, isn't that interesting? Same as the weekly. And then 55. All right, so opening range for gold looks like about $12 or so. We just hit the 8 o'clock candlestick formation. Trend, zigzag says it's up. Trend, it's very mixed here with the moving average, but essentially flat to up. So we've got bullish pressure sitting underneath. We have some technical divergence, but momentum is still up. Dips are buy zones in this space, and so they are going to be buy zones as long as we can hold the top of the high volume box, right? Notice we fell right into that box, hit the moving average and the low of the zigzag pattern, and bounced again. What does that tell you? The traders in gold are emotional, and we could easily see a megaphone here. Easily. We moved up, we moved down, now we've got a higher high, we could see a higher low. I would be positioning long action down here at 33.56. If you wanted to look for short action up here at 34, wait until after that PPI. You get in front. If you're lucky, then that's great, but it does not build good practice because it could go completely at the flip of a coin in the other direction. Do I expect that it fades up here? Potentially, yes, but we have broken through the weekly expected moves and run for a hot minute before we rotate it back. That's very, very important to notice. Again, expected move to the upside, 3,400. We broke it, went to 3,410 already. Expected move to the downside, 3,356. All right, let's go to SPY. Whoa. SPY had an opening range of, well, it looks like about $1.50. And so what's very important is that we pay attention to the prior day's high volume. We like doing that. Notice it came to halfway up the marker, and now we're at the bottom of the opening range. What is the entire formation telling us? Zigzag pattern says it's up. Moving average says it's up, but we just rejected that very firmly. Momentum is down. What does that tell us? It tells us we're going to have candlesticks that retrace each other because these guys are moving in opposite directions, and in general, dips are going to be buy zones. Expected move to the downside, $596. Expected move to the upside, $601.50, right? Could we easily blow out of the both sides of this? Absolutely. Absolutely. This PPI number could really end up forcing prices in any sort of interesting way, to be honest. All right, so what would I do? Overall trend is upside. I'm looking for the deep dips to buy. That's what I'm staring down today. All right, Qs. Zigzag pattern shows trend is up. Moving average, trend up. Opening range, I don't know, about $2 wide, so fairly normal, right? Okay, so what's the trade? Dips or buy zones. Momentum is negative. So let's take a look at the formations here. Now, my suspicion is that big bounces are sell zones. Here's the problem. A lot of hedging went on yesterday, and so the hedging has got the equities and the broad indices short while they're buying they're keeping their long portfolio intact. They're just trying to hedge against any downside potential. If they're caught on the wrong side of that and they have to turn around quickly, easily we could get a savage move to a higher high. The weekly implied vol is not up here until 540. That's the same thing that we're seeing in SPY and across the indices, right? Every index that we've looked at, these dips have been buys. Super important for us to consider. Commodities, of course, looking a little bit different, but neither here nor there. All right, so staring this down, expected move to the upside, 533.46. Expected move to the downside, 525.92. Okay, dips or buys, big news coming, potential gap fill, but it needs to fill during the trading day for it to matter. Very messy storyboard. I'm going to look for the edges to participate, and we'll see what happens. All right, everybody, stay frosty today and watch your size. Wait for your setup. Wait for your setup. And remember, the anchor of every good trading system, whether they quantify it that way, talking about it or not, is old resistance becomes new support, or old support becomes new resistance. Just draw yourself some boxes and trade around them. Make trading more simple. It's going to be better for us. All right, take care, everybody. Stay frosty.